Good morning, traders. This is Juan Maldonado from the Elliott Wave Street. Please read our disclaimer at elliottwavestreet.com. This is the euro, but before we start talking about some wave counts, I want to share with you this intermarket analysis. Look, here we have the S&P, we have the VIX, and we have the China 50 index. Look what happened last week on China and look this week. Wow, that is fantastic. We have on the China index, the Chinese index, this strong move up. Let me show you the monthly chart. We are seeing new record highs, historic record highs. Look at this candle during this month. That's really important. Look what is happening in China. So that's really good. And if we go back to the other markets, the VIX has been going down from the weekly basis, excellent, and the S&P is going up. So that's great because it's telling that the markets are going back to normal. The VIX is still pending a little bit more of a move down, to be completely under normal levels, because here we need to have the VIX coming below the 20s will be great. However, the emergency seems to be over in the world. The VIX measures the risk because it's the implied volatility on the S&P options, which means that when it goes up is because traders are trading more options, are buying more calls, puts, whatever new contracts, and that increases the VIX. But this was the peak during the emergency. It seems to be over and we are going back to normal. So taking this thing in mind, let's have a look at the dollar to connect a little bit this thing to the markets, to the Forex markets, where we have the dollar index going down strongly right here in the middle. So the S&P going up, the dollar going down. It seems that the dollar wants to go back here to these levels, 94 and 65, but this week at least the 95.69 area at least. Now let's go to the euro. Let's see what the euro is showing from the weekly chart. My main plan for the last weeks have been to see this leg up to the 1.1420. However, the corrective wave 4 was more complex than expected. And if the price crosses the 115, we are going to be in a different wave count. So the wave count is not telling to sell. It's telling to buy. And we target the previous high. And once we are there, we will check again to see the momentum, to see some other things. But look at this beautiful move on the euro. Is going up strongly. I would like to see at least a retrace to be able to jump into the trend. I haven't taken the euro yet, but I would like to see a retrace in order to jump into the trend. I have this target at the 114.20 at least for this week. And once it retraces a little, I want to jump into the trade. Let's have a look at the S&P. The S&P on the weekly chart is in a pretty healthy leg up, in a pretty healthy bullish trend. We have the S&P making higher highs, fantastic. And then the S&P will make a higher high? I think so. We are going to break out the level. Look, here is the 3,000 area. Here is the 3,100, the 3,200, 3,300, 3,400. So slowly we are going there, and this week I'm looking for a breakout of the 3,200 area to clear up this high, and then it can go to the 3,300 area. And why not the 3,400? Not sure if this week maybe we could take more time. And once we're there, we will check, because what if this is the end of the corrective? It could be possible. So those are things that we don't know, But for the shorter term, the medium term, we are going up with a high probability. The S&P will continue growing. Of course, it can have some noise, it can have some corrective waves, more complex inside, whatever, but at the end, we're going there. So my plan for the trading the S&P will be to look for a retrace. I think that the wave 5 is almost done, or it's done. And once I have a retrace, I want to jump into the trend, because then we can have the powerful wave 3 after that. And let's have a look at oil. Oil, it's pretty interesting because while the S&P is going up and we have China flying, why oil couldn't continue higher? This is a heads up. This is a red flag that we need to consider, because I believe oil will need to go back to this area, or maybe lower, and from there it can bounce. So the fundamental reasons could be that the oil companies, they need to start producing again. They need to start working again. So maybe that could increase the offer and could push the price a little bit lower, even with a growing S&P, with a growing indices around the world. All right. So that could be the logic behind. All right, traders. So that's the plan to start this week. This is just a little sample of all the work we provide and all the analysis we provide on Elliott Wave Street. Please visit our website right now, elliottwavestreet.com, and under the membership tab, you will find our membership plans. On the educational tab, you are going to find our course. Let's have a look at the membership. Here on the membership, you're going to see our 3 plans for the Forex, for the stocks, and the full access plan. So you pick the one that you like. Subscribe for just $19 the first month, then automatic recurring payments for $75 per month after that. So take a trial, see how my analysis fits your trading style, and start using Elliott Wave without the need of being an expert. If you are learning how to count the waves, also is going to be a great addition, because you are going to see another point of view. All right, traders, I wish you the best for this week. Make some good money, and I'll see you inside the membership. Take care. Bye-bye.